Hello, everyone. This is Socrates and Tyler Jenks with the Hyperwave YouTube channel and Lucid Investments. We are coming live today to take a look at the Bitcoin weekly close. There's going to be a lot to talk about in crypto, so that will most likely take all of our time. But if we do have some time left over at the end, we'll take a peek at some of the markets opening overseas here to see either what the futures in some of the commodities markets are looking like if we have time there. So how are you doing, Tyler?
I'm doing great.
To see either what the
I've been talking to clients yesterday and today and just got off with another one. More and more people are confused about what's going on, and I tell them that makes one more of us because these are very, very difficult times in all the markets, but very important to make the right decision at the right time, always leaning towards the most conservative thing you can do when you're not sure. No reason to be a hero. Better to be sitting in cash if you don't have the weight of the evidence firmly on your side. And I'm going to let Socrates take the bull and run with it. He's got a bunch of charts for us, and I will learn as much as you do and try to jump in and add my 2 cents where I can.
All right. Just cracked open a beer and I'm ready to go ahead and share my screen and take a look at some charts. Okay. So first one that I've been keeping my eye on is this chart in order to help me time when an actual move is going to happen. Generally, before a big move happens, you get a lot of shakeouts or a lot of chop that causes people to lose a lot of money while the market really doesn't go anywhere. And then after that has taken its course, then you get a quick and sharp move and then some more kind of choppy action before another big move. And it is a pretty common sort of markets will tend to trend about 30% of the time. About 70% of the time, you should expect them to consolidate, and about 30% of the time, we should see the market trend. So that's kind of a rule of thumb that I'm always keeping my mind on and always trying to identify how long are the trends lasting, and therefore can we induce how long the consolidation periods are happening for, or vice versa. So that is what this chart is illustrating here. Notice how the consolidation period on the last two kind of sideways action happened basically for exactly a month. First, on April 2nd, we topped out around 5,500 and consolidated between 5,000 and 55 for 1 month, from April 2nd to May 2nd. We proceeded to rally 55.4% in the following 11 days, from May 2nd to May 14th, not counting the second, starting on the third there. And then we have the 1 month consolidation period here that happens from May 14th to June 14th. And it happens in the same sort of kind of parallel channel or rectangle formation that is slightly angled up instead of being just flat. Both of these do have a slight angle upwards. And then after this period broke, we went plus 55.4% in 9 days. So kind of spooky there in regards to how it was exactly the same percentage amount. And this was something that I was actually following back in here. And I did tweet a chart out here back in the first or second week of June, showing that maybe this 1 month consolidation is something to keep an eye on, and that this is looking an awful lot like a fractal. And if we do break out after 1 month, then watch for this a similar sort of action. And that is basically exactly what happened. It's almost spooky how well that worked out. It happened a little quicker, which is something that kind of makes sense if you think of a sort of parabola or a bubble type of market, or specifically a hyperwave. With each leg that you go up, it decreases the amount of time that it takes to return a similar amount. In phase 4, if you return 100%, let's say you have a hyperwave, and phase 3 returned 100%, and phase 4 returned 100%. You would expect phase 4 to do that in less time, in less amount of days. And this is driving me crazy a little bit. There's some sort of feedback coming through from your end, Tyler. Can you tell any playback that we might?
It sounds good from my side.
Okay. Let's see here. Do you know how to put it on mute?
Probably not, but I'll try. Let's see, mute. Where would I find the mute button?
That's in the top center. There's like 4 icons. There's a red leave call button, a settings, and then there's a mute microphone. It's got a, yep, you got it. Sweet, perfect. That's going to be a big help. I really appreciate it. That has been coming through and driving me a little bit crazy. Okay, all right. So we got this action here where we did increase 55.4% in 9 days opposed to 11 days. And that is, like I said, it makes sense. As you progress in a bubble, in a parabola, or in a hyperwave, the returns start happening in a shorter period of time. So that is where seeing this being in 11 days and this in 9 days, that definitely makes sense to me. And really, this has played out very nicely. And now we see that we're about to 1 month of consolidation following this plus 55.4% in 9 days. And notice the difference. With the first two, we have these blue kind of channels that are angled upwards, and slightly, but it is higher lows. If anything, you would draw at worst case a flat area of horizontal support. And on this one, notice how it is a bear channel that has been forming. It is more significant than even both of these. Now, these are slightly angled up. This one is significantly angled down with significant tilt compared to these last two. So this is painting a very, very interesting picture to me, saying that potentially we should expect this price to continue to chop around, whipping in and out and in and out and in and out for the next few days until the 26th. Let's see, today's the 21st. That's about 5 more days until we would get to a 1 month consolidation period for this one. And at that time, if we do break and break hard, I'm going to be very inclined to kind of trust which way that goes. Right now, we've been kind of breaking up, breaking down, and it's been a lot of chop and kind of a lot of guess game. Whereas if we continue to move sideways, say between 10.5 and 11 for the next 5 days, and then we get a nice break to the upside, that would tell me that this period of consolidation is done and we're likely ready for the next leg up. I would, just based on this chart alone, expect the next leg to be down. If we can continue consolidating sideways for the next 5 days or so through the 26th, then we could be, in my opinion, we'd be most likely to break down, because the consolidation would have run its course, but we're coming off of this bearish structure, compared to back in here where we were coming off of this bullish structure. Now, this is something that I'm not putting too much weight on in terms of which way I think the market is going to break. I'm just using this to help me to time when the market is going to break, such that and that will help me to avoid some whipsaws, and then help me to also identify when the real break comes. If the market continues to follow this 1 month consolidation, followed by about a 9 to 11 day rally, which is about the 70% and 30% ratio. So I would expect this to continue, but I wouldn't be too confident about which way the market is going to break from this chart. Instead, I'm just going to be really focusing on trying to be as patient as I can over the next 5 days and try to really not get too overexcited or over afraid if the market starts moving in my favor or against me in these next 5 days, because it's still looking like such a prime area for more chop. And generally what will happen is it will go the opposite direction before the break. So for example, right here, the last move before the break up was down. We moved down and then we broke up. Right here, we moved down, found support, and then we broke up. So right here, if we move up over the next 5 days, up and into the top of this channel, that would be something that I would be paying very close attention to, because we do have time for one more nice, real good fake out or whipsaw. And if that were to happen, I would expect it to be in the opposite direction of the following trend. So if we do break down from here and retest 9, now we might have some sort of big W type of pattern right here. Or if we break up, then we could be kind of the inverse of what we saw back in here and back in here. So that's the first chart that I had. I apologize making you go on mute, but hopefully that isn't too much trouble for you to pop that back off.
No problem at all. Very interesting chart. I would, very similar to the other comments that I've made about the small number of cycles that we've seen. I love cycles, particularly time cycles, and you just pointed out a great one. If we had, 8 or 10 of them, then this 11th one, I think you could draw some conclusions about. I'm a little nervous about the fact that we've only really got 2 to look at, and this one could run shorter or longer. There's a thing with cycles called translation, where a 30-day cycle that runs 10 times in a row, on the 11th time will be much shorter or much longer, and that's called the translation of the cycle. And then it will pick up again back to that 30-day period, or the month-long period, or 6 month, or a year. One of the greatest cycles of all times is a 4-year cycle in the stock market and the economy, where we had about 27 of them in a row that were pretty uninterrupted since the founding of the Federal Reserve. And a lot of people just traded off of them. 2.5 years up, 1.5 years down, 2.5 years up, 1.5 years down. And people said, well, that's because of the presidential cycle every 4 years. New president, you're going to run for office, you're going to do things to get reelected. The other side's going to do things to try to get elected. The Federal Reserve and the Treasury are going to do whatever the reasons for cycles. They are unquestionable. But you tend to need a good long series of them to be able to draw conclusions. That's just one very quick point. I'm just going to quickly bring up another chart.
Great.
That I've been looking at on Bitcoin, which is real short. It's just a 30-minute dealio. but it's one that's got my attention because of this unusual pattern that this has been in for a long time. I was looking for either a breakdown out of this earlier today or a break up, and we've broken up out of that. And now we're coming right back to the underside at 10,800 of this very long line here. And this is such an odd looking pattern to me for a number of reasons. But the big thing that I keep talking about are these green lines at 10,100 and 11,100. They're spooky. They're spooky on the short term. This wicking up to it. Once you get below them, it gets nasty for a period of time, and then right back up into it. And then again, trying to get above it, back down, but can't get down to the bottom of it. So this action right here, right now, on the very short time frame, to me is very important going into tomorrow morning. And the other weird thing is this very long. Yeah, go ahead.
Sorry. Before leaving that chart, could you just show what's the measured move on that falling wedge on the 30-minute?
Would you take this?
Yep, I'd probably leave out the wick. Yep. So what's that? Like
so if we just did that, it looks like it goes from right to the from 11.1 down to 10.6. 10.6-ish, 10.65, so 400 or 500 points, 400 points, call it, which would get you back up to the 11,000.
Yep, that's just what I was thinking, a retest of that horizontal, which that's something that's very interesting to me. I'm always thinking in terms of equal and opposite reactions. So we tested the bottom of this channel, and then we wicked off of it real hard. And then that next one right there. So test the bottom, then we go test the top and kind of get a wick off it. Okay, that's an equal and opposite reaction. That makes perfect sense. Now let's see what happens next. Do we go below that bottom area support, or do we create a higher low and fail to go all the way back there?
Yeah.
So now I'd be paying very close attention to see, is this going to pull up short of the top end of the boundary, similar to how we pulled up short to the bottom end of the boundary? And if it does, then I would expect to see it do so to like a similar distance in terms of percentage from it. But if this doesn't pull up short from the top end of the boundary and does go back up to test there, then this would be a signal of strength that I would expect an equal and opposite reaction should push us through the top end of that boundary, roughly in line with the percentage that we stayed short of it, if that makes sense. So if we're 3% short of falling to the support, then it makes sense to me we'll either come up 3% short of the top boundary, or we'll break through it by 3%. So that's just kind of how my mathematical kind of mind, the right side of my brain, likes to think of these sort of charts.
That's great stuff. Also, I noticed on this chart the fact that we took out these stop and reverse points, and now we've got a series to the upside. We've also just taken out the setup trend line up here. Just with really this last candle, we had been right at it, wicked to it, wicked above it, right at it, closed below it, right at it again, and then finally this, and we've got 5 minutes, 20 seconds left on that. But so that'll be interesting to watch. So I just wanted to throw that out before I forgot about it. And I will now send the controls back to you.
That was very, very interesting. And yeah, we will have another chart to touch on here before taking a look at the exact weekly close. Of course, it's all pretty much has to do with the weekly close. But before getting to that exact candle, want to look at a few other things. So here's a chart that was posted in our Hyperwave Telegram by Gabriel, and it is the credit goes to, for the chart goes to user Codex on TradingView. And this is one of the best kind of fractal charts that I've seen in a while, and it really interests me. So I wanted to share it. So first, we'll just start with this yellow line. Notice we come down, and it creates a left shoulder, and then we get a head here.
Is there any way to blow that up at all?
Let's see. I bet there is.
That's a great chart. I saw it on Telegram.
I'll just keep zooming in as much as I can here.
There you go. That's good.
Is that good? Okay.
Yeah.
All right. So starting with this yellow line, we've got left shoulder, head, right shoulder, and then you've got the purple line that's like a one drive down and then a bounce back up here. That so the yellow is just a one down, two up. The purple is just a one down and then up and then down and then up. The yellow is head and shoulders. This one's upside down, bullish pattern, left shoulder, head, right shoulder here. And then this right shoulder kind of becomes the left shoulder for the bearish head and shoulders. Now we pop up.
That's wild.
Here. It sure is. I mean, this thing's just crazy. So head here, shoulder here, and then we come down, and what do we get? Head here, shoulder here, shoulder here. So following from this, basically wanting to see a higher low above here somewhere, and then a rally up to the top of this channel, which this is the same channel I've been looking at, which that would take us. That's basically where this measured move from the head and shoulders would take us. It's 9 up to 10.8. That's about 1800. So that's about where that measured move is. I can't think of it exactly off the top of my head, but and then following from there, if we do get this higher low here, this could kind of turn into the left shoulder for a bearish head and shoulders here, and then who knows if it would continue even on down through here. So this is definitely a great chart. I love fractals, and I agree with Tyler that this recent action has been very, very finicky, or something that I just view as nothing but liquidations and squeezes going on. Like this just isn't natural action in a chart to me. Like the only time you see, at least me, the only time I see this type of stuff here is in crypto. And it's pretty much as simple as that. And probably some like thinly traded commodity markets or something like that, where it's very easy for people to control the short-term price movement. But this type of stuff in here, like this just is not natural to me. Say whatever you want about it, but this just doesn't really make a whole lot of sense from an organic perspective. But that fractal sure does make a whole lot of sense. Just going from head and shoulder to head and shoulder to head and shoulder to head, and now we've got this head and shoulder here. So that is very, very interesting to me. And while we got it on the 4-hour chart, I'm going to go ahead and pull up my 50 and 200 EMAs to show what's been going on. I did make a post yesterday on TradingView outlining why I'm buying and where I'm buying. And the first entry was the confirmation of this inverse head and shoulders, which I don't think it came there. It came right here, very, very close to the top, right at about 11,000. I guess, well, I've got it up. I might as well just pull that up over here because it is there are a few important things to talk about. And let me go ahead and try to zoom in on that. Okay. So we see the head and shoulders confirming right around here. And the first thing that I wanted to point out, at least I thought it was the first thing, it's the reason I'm bringing this up now. was to show a horizontal resistance zone from 10,800 to 11,000. I thought I included a chart, but I clearly did not. So that was a big waste of time. But that was something that I was paying very close attention to, was this horizontal at right here. And saying that the first 15% of my long had been triggered with the confirmation of this inverse head and shoulders, but that I would wait to be adding until we were able to get out of this 10,008 to 11,000 kind of zone that I was seeing right there. So that did save me from getting too much of a position entered in right here, very close to the top. And that is the biggest reason right here is why I like to buy in pieces and only scale in and out just in pieces, like generally 15 to 25%, such that now from here, if the price keeps moving in my favor, great. Now I keep adding, and I've got exact zones lined out for where I'm going to add. It's the first two that I'm thinking of are breaking 11,100 and then crossing 20 on the ADX, which this is showing no trend happening, and wanting to see that showing a trend happening before I'm really getting too much exposure in. Whereas if I was entering 50 or even 100% all at once just because this pattern confirmed, well, now I'm kind of in trouble, and I don't have any sort of I don't have much flexibility. Whereas when I only scale in a piece, if it moves in my favor, great, I add. If it moves against me, okay, well, it's all right. I've only got a very small amount of my position exposed, 15% of X. So if I do have to take a stop, it's going to be nominal. It'll be about at most maybe 10% of 15%. And that's on the higher end because my stop loss here is a death cross with the 50 and 200 EMAs. If those get a death cross, then the price would have to be more than 10% below 11,000 before I get out for me to lose more than 10% of 15%. So hopefully that makes sense. But that's what I'm looking at here is I'm not taking a stop until we do get a death cross. And this just shows a perfect example of why I love these exponential moving averages. They will just fail to signal when they shouldn't be or when you don't want them to be. And this is something that the moving averages will never do, ever. But the exponential moving averages will sometimes just turn into like repelling magnets and refuse to even get close to each other. As price chops around above it, the exponential moving averages are taking most into account the recent action, which is this chop above and below these, which now flattens both of them out. And when both of them are flat, they just simply can't really cross. So this is a very important time for me. And whenever I see these moving averages get this compressed with the price this close, it tells me that I need to be paying very, very, very close attention. And I need to be very, very flexible in my outlook, in the sense that I need to be ready to buy or sell, because when the price consolidates with moving averages this tight, this is like, in my mind, a Bollinger Band super squeeze. And it may or may not be actually happening, but this is what works better for me. I don't usually use the Bollinger Bands too much because this works so much better for me when I see these moving averages get this close and this indecisive. That tells me that there's big, there's a lot of people that are viewing this as bearish and a lot of people viewing this as bullish, and whoever wins, that next move is going to be huge because everybody else that was on the other side is going to have to be covering, and this is following consolidation. So the market is already ready to trend after a near month-long consolidation. So what's most important to me right now is what we have seen in the last about 8 to 16 hours. I added to my original post saying that First of all, I wanted to see price support above 10.6, which was the neckline for the inverse head and shoulders, and it's also where my moving averages were waiting. So as long as we were supporting above there, I was feeling very comfortable about my long position. When that broke down, I woke up this morning not feeling great, but noticing that we just had a higher high from here. And if this can find support anywhere above 10,200, it would be a higher low following a higher high and a higher low. And so that would be something that is telling me that this is ready to continue at least back up to 11 and likely up to about 12,500. If we can't establish this higher low and this does break down 10,200, then it should see some follow through, and almost any follow through at all would lead to a quick cross of these. So even though these have been so close to crossing over the last 4 or 5 days but haven't, that doesn't mean it's time to fall asleep. And in fact, just the opposite. Know that these can cross in the blink of an eye. It only takes 1 or 2 good candles for these to either cross or start to separate back in a bullish manner. And if they do get this close to crossing and fail to do so, it is a very strong indicator to me that the trend should continue. So that's what I've got there. Anything to add, Tyler?
Great stuff. I've been watching the same thing, mainly because you've been talking about it. And so I've got my 4-hour chart up too. What I'd like to do is go out a little bit longer. And so what I will do is bring this guy up, and I'm going to go out to, I'm going to start with a weird one. See how weird that is? That is weird. This is the 8th day, and I'm really watching it closely. You can use a week if you want to, but I've got this uptrend line that goes all the way back to the beginning of this move. And right here, after a 9, we did get a 1 candle pullback, but it didn't break that line. On the 2, above the 1 and above the 9, we actually started below the red line but closed above it, on the red line, way above it, pull back, didn't break it, all the way to the ultimate high. And that's weird. There we go. There's so many weird things about these charts. Okay, so still intact but sitting right on it.
Sorry, Tyler. Sorry to interrupt. But if you click on the log button instead of the auto, click on that one. There you go. Perfect.
9, 10, 11, 12, 13. Okay, good. Great. Okay, so then that throws all the lines off. So I need to redraw those.
Yeah, I think the chart was stuck in log there for a little bit. So yeah, that's probably why that one's a little funky.
So let's take it back down below the lows. One, 2, 3, pull back. 1, 2, 3, 4, pull back up. Okay, so there's still plenty of room there. Good. And this is coming off a 9, which a number of people pointed out, and people sort of poo-pooed it, and I can see why, because it's such an odd number. But we've now got a 1, 2, 3 week pullback, and basically these lines are telling me that all we've done is we've come back into the zone between 10,100 and 11,100. So on a longer time frame, it looks to me like there's a reasonable chance that we do go up from here. And if we do, it's going to be a lot bigger than just 11,000 or 12,000. Now, that's a big jump. So here's the weekly, which never got near a 9 and stalled out after the 3 went sideways up on the 5 that became a big down candle, but still the same basic pattern as you would imagine, where the uptrend is still in place. And we're trapped in this zone for 1, 2, 3, 4, 5 weeks. And we do have the possibility of, you know, weakness. This one actually broke the line last week, but, or is this week? This is, it's hard to tell. I think this 2 must be on the week that just started, which means we did pierce it, but then closed back up above it again. So I always like to start with these longer time frames, because then you can get rid of the noise and look at what sequential is telling you. And this is the short-term sequential here. Even though it's on a weekly basis, it's only a 2-week chart. And you see that even though we've gone sideways here for 5 weeks, it has not even penetrated the intermediate term uptrend line. The long term is perfectly fine, except it's way far away from everything. But I interpret that to mean that there's the real possibility of an acceleration up from here. But we need to get above these 2 lines, 10.1 and 11.1, on some kind of a closing basis. And then even bigger, all of the monthly stuff. And the only reason I mention all of these longer terms is because when short-term markets start getting very frustrating and you end up overlooking the main trends, what you end up doing sometimes is you begin betting against the main trend, because you kind of forget that it's sitting there and it's still by far dominant. Remember my rule, and that's all it is. And I sort of came up with it, you know, without a lot of thought. I hate to say that, but it's true, that I give a 5 to the long-term trend, and I give a 3 to the intermediate term trend, and I give a 1 to the short-term trend. And all that means to me is why the principles that we talk about, the 10 principles of investing having to do with the long-term trend, is the only thing you can count on, because it's the only thing that really subsumes all fundamental data. When you get down to the intermediate term, it subsumes about 60% as much. And down at the short term, basically it's 20%. It's just noise. And because of that, I always go back to the long term to start any analysis, even down at the short term time frames. And this silly thing, even on a monthly basis, even though we pierced it during this month, we're now right back up, you know, between these 2 green lines and well above this red line. So on the monthly basis, on the weekly basis, on the 8-day basis, it's still in a bullish posture. It's only when you get down to the daily and shorter that we're having trouble getting any sense of really what's going on. And that's why all of Socrates' work in all of this detail about what is really going on, not only with the fractals, but just with these short-term movements, is so important if what you're trying to do is find entries for intermediate or longer term, or you're trying to scalp 1 or 2 or 3 or 4 days worth of counter trend moves. And all of that, the closer you get to the detail, the more clear the next step up, which is the intermediate. And at the intermediate, it gets much more clear if the long term is actually driving it all. So with that, I'm going to jump back off and turn it back to Sock.
Oh, that's a good nickname for me. I haven't heard of yet.
I got a million of them.
Oh, good. So yeah, I think something you touched on there is very, very important, but maybe would be easy to slide by. And that is, and even though maybe you didn't give it a whole lot of thought, sometimes some really important ideas don't need a whole lot of thought because they're just that simple and basic. So for your long term, you're giving it 5 points. For your medium term, you're giving it 3 points, and for your short term, you're giving it 1 point. I think I'm remembering that right. And the real thing to pay attention to there is that the short term plus the medium term is still inferior to the long term. So if you've got short term bearish, medium term bearish, you've got 4 points bearish, and then you've got long term bullish, so 5 points bullish. That tells you that maybe you should just have a very, very small amount of long exposure, or you should be kind of sitting on the sidelines, maybe waiting for a little bit more of a higher probability situation where you've got maybe the medium and the long term lined up, or something along those lines. And that is something that is, I do it differently, and I'm not thinking that, I'm not convinced that my way is right. I'm inclined to think that there's a lesson in there for me to learn as well. And that's how I've mentioned how I don't like to short Bitcoin in bull markets, and I try to shoot for a ratio of about 90% longs to 10% shorts at the highest end. If I am shorting Bitcoin, I want to, in a bull market, I want to make sure that I'm not doing it too much, and that I am really having a strong propensity to be on the long side as long as the long-term trend is bullish. But I have said that there are times where I will go ahead and short it, and this last sort of few weeks is a great example of long-term recently turned bullish, but we look like we move too far, too fast. A lot of things look very overbought. There's a lot of room for a deep correction, leaving some really good risk-reward opportunities on the table for selling or shorting. And therefore, I was willing to take them because my time horizon is in line with the trend that I'm trading. If I'm just going to hold on to this position for a few weeks or a few months tops, and the short and medium term trends are bearish, then that's a trade I've always been willing to take. I have never thought about how much more important the long-term trend is relative to the short and medium-term trends. And if using a system like Tyler's, where the long term is always going to be greater than the short and the medium term, that can be a great way to help you understand which side of the market you should be trading on, even though, like, over the last couple of months, there's been 50 shorting opportunities that looked like they were great shorting opportunities, where everything lined up. You've got a 9, you're at resistance, you've got reversal candles, you've got parabolic stars breaking down, whatever the case may be. There will be so many times where it just looks like an ideal shorting situation, all the way back to when we were at 6K at 5,800. And each time you just get blown out, blown out, blown out, blown out. And to protect yourself from that, implementing a system like Tyler just shared, something as simple as 5 points for long term, 3 points for medium, 1 point for short. And I'm only going to be entering if I have, say, 8 points or 6 points or whatever. That's a system that is very basic and shouldn't require a whole lot of thought, but it could be tremendously powerful if you have some sort of tool that keeps you away from shorting Bitcoin. When it's in a bull market, you're going to make exponentially more money than if you're always trying to take every signal on both sides of the market. So that's just what I wanted to add there. And
yeah, that's a great point, and it gets me thinking about a couple of other things. I know we're running long, and I do want to look at the stock market and the gold market briefly, but Bitcoin is where it's all at right now. And but this thing about long, intermediate, and short term, I've said on many occasions, and Socrates disagrees with me on this because of the nature of what he does, the nature of his trades. But in a long-term uptrend, all I want to do is buy dips. I never want to sell pops. In a long-term downtrend, I'm not interested in running counter to that downtrend by trying to buy dips, because I'm running counter to the trend. And even if the intermediate and the short term together are giving you buy signals in a down market, you're not going to be right as many times as you are wrong, because 5 is greater than 3 plus 1. But there's some interesting corollaries to that. One is if you've got a bullish intermediate term and a bullish long term, that's 8 points. You don't want to take a trade that is 1/8 of the probability of you being right. You will make errors 7 out of 8 times trying to play short-term pops in a down market against a long-term and an intermediate-term down move. It doesn't seem like you do, because if all of your information is short-term and that's all you're trading, it would seem like you've got at least a 50-50 chance. But if you go back and you really study your trades, not 5 of them, but 1,000 of them, you'll find that that tends to be true. And because you can't make that prediction of, is this next one going to be 1 out of 8, or is it the one that is actually going to work, is a little bit like going all in poker, hoping that somebody's not going to hit a straight or a flush or a higher pair than you are. It's all probability. You want to play the probabilities. But there's another interesting twist with those numbers. If you've got a bullish short term and a bullish long term, that gives you 6 points. That's twice as powerful as a bearish intermediate term. You've got 2 to 1 playing that short term bounce if the long term is also long, almost at the ratio of 2 to 1 against an intermediate term downtrend. So it's just a rule of thumb. There's nothing, other than many, many observations that tell me that is generally correct. And so hopefully that's something that can be used.
I was on mute there. And there was one thing on your weekly chart that I just wanted to touch on real quickly, if you wouldn't mind pulling that back up. And you did mute yourself as well, which I appreciate. All right. Yeah, if you could just throw that on the weekly and take the price off. Okay, yes, that is definitely something that is painting a very interesting picture. Notice the TD sequential is flipped over to a red 2. I'm not sure whether or not that's gone below the 1. No, of course it hasn't. It just opened. But look at how the short and medium term moving averages are reacting. As we had the last big pullback, that was a prime situation to get those to cross, to get that short-term moving average to cross the medium-term moving average, which would be, at the very minimum for me, a profit-taking signal. Getting a sell signal from the short and the medium-term moving averages when in a long-term bull trend, that's my first signal to go ahead and take profit. If I didn't say when the weekly SAR broke down or whatever. So that didn't happen. And now look at how quickly the short-term moving average is starting to angle back up, and how sharply the medium-term moving average is continuing to angle up and not even thinking about starting to flatten out. So that's painting a very different picture than the TD sequential, which is price flipping, and this parabolic SAR, which was already broken. This is saying that it looks like we closed above the short-term moving average, which is huge. And then B, it started to turn back up, which tells me the same thing that I'm seeing on my 4-hour chart with the 50 and the 200 EMAs, which got super close to crossing over the last few days, but haven't. And now when they do that, I don't expect them to do so. So that is very important action that we're seeing out of your short and medium term moving averages. And I know that a lot of people do not like that 2-period moving average. I'm one that always kind of shied away from it. But as I have been analyzing charts with you over these last couple of months, I've really started to grow an appreciation for how important that thing can be. And in a situation like this, how much information we're getting from that 2-period moving average, which just wouldn't be available on any other time frame or any other moving average.
Yeah, great point. I hadn't noticed that myself, but it is very similar to what we see with your exponentials, the longer exponentials, and that's very interesting. I think this is a very important weekly candle here, and we're just starting out on it. So today, tonight, tomorrow, the next day, there's going to be a lot of action. So, put your running shoes on, folks.
That is what I would say as well. And now I've got a weekly chart to share real quickly. And while getting that pulled up, just wanted to share my thoughts on the 8-day chart. So that's something that I generally don't. It's very easy to cherry pick different time frames to kind of to get the picture that you're wanting to see. So if you're bearish and wanting this thing to turn around and you're not yet on a 9 on the weekly, then it's super easy to adjust to like the 8-day or the 6-day or the 3-day or whatever. If you're just going to go down a line and try to find, like, cherry pick the perfect time frame to get exactly the picture that you're trying to find, that's something that I have a big problem with. But that's not necessarily what's happening here. And I am inclined to listen to the 8-day chart, but it for me, it would have to be kind of consistent. Like if we're looking at the 8-day now, and while it's coming off of a 9, but then we don't look at it for another couple months until it comes up to another 9 or something like that. That's something that I try to avoid myself. I always strive for consistency, and the consistency of time frame is one that is important to me. But I'm not saying that the 8-day isn't one that you should use instead of the 7-day. I'm just saying that it is one that I would say you need to pick and kind of stick to, because they're so close. Like, you don't want to be checking the 7-day, the 8-day, the 4-day, the 3-day, the 2-day. You don't want to be checking time frames that are that close. You want to have a short-term time frame. For me, I like the 15-minute and the 30-minute chart. When I really want to zoom in, I love it. Sometimes I'll even look at the 3-minute chart. That's my short-term time frame. My medium is about 4 hours. That's how I determine my medium-term trend with the 50 and 200 exponential moving averages on the 4-hour chart. So I'm looking at the 4-hour. If I'm looking for a good, like, multiple month-long sort of move. And then when I'm looking to zoom out, I pull up the weekly, and then sometimes I'll go to the monthly. But if I'm going to look at the weekly and 5 other time frames between the weekly and the 4-hour, it would be very, very redundant and wouldn't be worth my time. It would just end up confusing you, because, like, say the 8 days on a perfect red 9, it's a sell signal, and the 3-day is on a green 2 above a green 1, telling you to buy. It's like, what do? You need to, in my opinion, pick one that you like, that you notice, back test it, see what works best. I'm looking at that 8-day, that thing does work. And I'm inclined to think, seeing how consistently that has worked, that potentially that could be a good one to use. Furthermore, it's a Fibonacci number. And that's something that is very important to me whenever I'm determining different time frames and indicators. Often I will specifically go with a Fibonacci number. We're talking 1, 2, 3, 5, 8, 13, and then on up the line to 34. For example, if I'm looking at moving averages similar to Tyler, I tend to just throw on the 34 instead of the 30 because it's a number of Fibonacci, and that is important to me. So the 8-day chart being a Fibonacci number is something that will jump out at me and make me think, maybe there is something to this. So I am interested with the 8-day, but I just wanted to clarify that I would very much shy away from following. If you're going to follow the 8-day, then I wouldn't follow anything down like the 5-day, 4-day, 3-day. Have a significant spread between the time frames that you are using. And now I'm going to pull up my Bitcoin weekly chart very quickly. So this is something that has been kind of exciting for me over the last couple days. Just looked at this chart yesterday after noticing kind of the area of support that we found, and am starting to wonder if this could be the first stages of a newly forming hyperwave. We do not consider it a hyperwave in phase 2. We do think that it needs to be phase 3 to be a confirmed hyperwave, but phase 2 is definitely the first stages and does provide some interesting opportunities to long, even if we're not expecting it to fully play out as a complete hyperwave. So first thing to mention is that the phase 1 is definitely weak. Phase 1 is the most important phase of a hyperwave, and getting one that's short is not highly is not necessarily a good example. It is definitely something that somebody could point to and say, nope, this is not going to be phase 2 because that phase 1 is just too weak. I would counter and say that since Bitcoin has a halving coming up right around the corner, it is going to have a lot of trouble getting stuck in a straight horizontal range for a year or two leading up into a halving. That doesn't make sense to me. So a short phase 2, I really don't have a problem with here. We have been spotting a number of hyperwave fractals basically all the way up on the 4-hour chart. In real time, we were looking at this being phase 4 of a hyperwave fractal on the 4-hour chart. That close below on the 4-hour did basically call the top here very, very nicely. And we were looking at that in real time. So here, I am seeing this as potential new phase 2 for a legitimate hyperwave. Legitimate meaning that it's on the weekly chart, so it's not wouldn't be a fractal. It could potentially be a real hyperwave forming. Now, I understand that a lot of people have a problem with this because we didn't return to 1,000, and therefore hyperwave is proven wrong. And people that are that narrow-minded are never going to learn anything. They're never going to make any money from these markets. That's just the bottom line. Even if this price never returns to $1,000, that doesn't mean that hyperwave is proven false. And it doesn't mean that it would have any effect on how you would trade a hyperwave to the upside. The rules of hyperwave told you to buy Bitcoin in 2017 at around $3,000. And then they told you to sell Bitcoin at the end of 2017 at around $13,000, maybe $12,000. So it tells you to buy at 3, sell at 12,000. If you think that is a pattern or a theory that has been proven false, then you are really missing the bigger picture. Really, all that's happened is if this doesn't return to 1,000, it means that we have 1 out of 400 examples of hyperwaves that broke down phase 2 and failed to return to phase 1. That really isn't a problem because it didn't cost anybody any money. Tyler wasn't short expecting the return to phase 1. No, he was simply staying out and holding on to all of his profit that he made in 2017. And how many people that are complaining about a return to 1,000 basically lost money in 2017 or didn't even think about taking profit in 2017. The most important part of this pattern is the ability to identify tops in parabolic markets. That is something that is extremely hard to do. And having a backup plan of I'm going to stay out of this thing until it returns all the way back down to where it came from, unless Consensio signals entries, that is a tremendously powerful way to psychologically not get over attached to a market that you need to be staying out of. Because if you just made a ton of money in 2017, you're going to be wanting to get back into this market once it shows some signs of life. When it bounced from 6,000 all the way up to 12 and you just made 400% on your money the year before, you're going to really be wanting to get back in there. And having Hyperwave telling you to stay out, and then also having backup plans that tell you to get back in when potentially this could be the 1 out of 400 that doesn't return to phase 1, that is extremely important. And that is a quick rant for everybody that has been giving us such a hard time on YouTube and Twitter, and especially when we start coming out with any sort of new hyperwave stuff, people are going to be very inclined to disregard it. And that is something that would be very much against your best interest to do, because even if it doesn't call the bottom, it still has an incredible track record of calling the top of bubble markets in every different market throughout the last 30 or 40 years. So seeing this action right here is extremely exciting to me. Originally, I was really wanting this thing to break down to 7,500, 8,000. Now, I am not so much feeling that way. I am still worried about this big shooting star, but this reaction that we got right here is very interesting to me and is almost an equal and opposite reaction. It's definitely not quite. We don't have as long of a wick, but it is something that makes you have to at least sit up in your seat. And then noticing how precisely it came back to test this horizontal, the prior resistance from May 27th, 2019, that is quite bullish. This last weekly candle is a very bullish candle for me. This big wick on the bottom of the candle that went down, retested prior horizontal, and closed way above the trend line, that is really bullish. And even though it's not necessarily an equal and opposite reaction to this, it is enough of one that makes me less afraid of this action here. And now I really am kind of fitting into the camp of wanting to find support above this area, 10,100, or even if it's a quick wick down below, then that would keep this phase 2 line intact. And if we can manage to hold up this phase 2 line for long enough, well, what will eventually happen is that the demand will accelerate and will take off into an accelerated phase 3 trend line. And if you get into a phase 3 of a hyperwave, 85% of them will go on to enter phase 4. And we all remember what can happen in phase 3 and phase 4 of a hyperwave, especially in Bitcoin or in crypto. So right now, this is probably going to be the most important chart to me, is this potential new hyperwave. And the less, to be honest, the less people that believe in hyperwave, the better it is for me. That was one of the main questions, was that once Tyler releases hyperwave theory, will it affect the pattern? Will it change this in any way? I was definitely inclined to think so. As long as people just think it's a bunch of baloney and aren't going to be doing any trading off of it, then it's a very low probability that this will change in any way. So the less of you that believe in this pattern, the better. And this is something that is very exciting for me. Last thing to touch on is that it is a rule that you can't have any price action, any close above phase one, or else the phase one isn't valid. And here that's perfectly fine because the phase one doesn't start until November 26, 2018. There will be times where there's price action to the left of the chart that is above phase one, and you resolve that by saying the phase one doesn't start back here. We don't have phase one back here, obviously. It doesn't start until this candle right here on November 26th of 2018. So that is the chart that I was most excited to talk about. What are your thoughts, Tyler? Is this the phase two?
Wow, that's very interesting. If you had asked me a year ago, I'd say no, absolutely not. But I have become a believer that even though all asset classes, including crypto and Bitcoin, act the same, I am convinced that this particular asset class has characteristics that we've never seen before in terms of the speed with which it can move in both directions, which could mean that these smaller hyperwaves that a lot of people have been talking about need a lot more study. Two things. Number one, where is that number one line approximately? 4,000?
This would be at almost exactly 4409 is where I would put it.
4,000.
409.
Really?
Yep, that's the highest close that we got from this stretch is on November 26th.
It doesn't look like it's above 4,100.
I'm sorry, you're exactly right. That's the high of this candle. My apologies. It's 4,102.
Okay, great. Because the only reason I bring that up is I was intrigued when we were back in that area about the 4,000 to 4,200 area. It seemed to me that it was remarkable resistance, and that's one reason I thought we had a really good chance of breaking down out of that. The second thing, though, is I would draw your phase two line differently. Remember that this big green candle is already part of a phase two. Therefore, exactly, I would connect it like that, and then down to the bottom of this red candle, the fourth one over from the big green candle, right there. And that's the way I would draw it, because the next green candle that broke that line didn't close below it, and the next candle that broke that did not close below it, and the next candle that touched it didn't. And then the correction back down to it went right to it, and now the wick that did break it in this last week was below it, but we closed above it. So I think that's the more precise way of drawing it.
Oh, that is beautiful. And I thought about that trend line for probably longer than I would like to admit to see the best way that I could draw it in. And that is right there, just a tremendous lesson for trend lines. The trend lines, they are subjective and they do need to be adjusted for the most part. And that being the case, that does mean that there is a best fit trend line. Regardless of whether or not trend lines are subjective and they could be drawn different ways, there is always going to be a best way to draw it. No matter what, no matter how many different ways it could be drawn, there's always going to be a single best way to draw it. And the best way, in my mind, is going to A, be the most objective and most repeatable, and B, have the most touch points. And Tyler's beat mine on both of those situations. His is more objective and repeatable, and it has more touch points. So that is a great lesson for me and hopefully for everybody else watching. Why is this more repeatable? Anybody that has attended the Hyperwave webinar likely knows, and that is that when you break through phase one, you want this to be a perfect apex. You want the phase two to start right where phase one breaks, giving us a perfect apex. And then you want to connect this to the first major correction that follows. So right here, we're not connecting it to this candle, this first red candle. That's not a major correction. Oh, and I got that all the way out of there. So that's not what we're doing. We are, though, connecting it to the end of this correction. And why didn't he connect it to the open of this candle? And that is because you want to always default to using closes, and the lowest close for this correction was right there. And if we draw that in, now this is going to be very, very repeatable. The lowest close for the first major correction is where we connect the bottom of this candle to, or the first breakout. This is black and white. You could repeat this every time. This is not subjective. It just isn't. There is maybe another way that you can do it, but it would be inferior to connecting to the lowest close of the first major correction. And then just notice what happens, how the next candle cuts through it. So there's 2 touch points, next candle 3, 4, and this one's almost worth 2 to me since it comes down so perfectly and gets such a good reaction off of it. So 4, now we've got 5, now we've got 6 touch points. And how I was doing it was the most touch points I could find was 3 in here, and I was connecting to the open. When I will connect to opens and wicks sometimes if the close isn't a best fit line. So there I was looking at connecting to this open, getting 1, 2, 3, 4, but that's more subjective, and it's going to be harder to repeat on a consistent basis, and it has less touch points. So that's just an absolutely beautiful trend line right there, and I will certainly be keeping mine set up that way. So that is everything that I wanted to cover on Bitcoin. Anything else from you, Tyler?
No, that's great. Thank you.
My pleasure. And it sounds like we want to take a quick look at the traditional markets opening.
Yeah, I'd like to see what the futures are doing. It looked to me like they were up a little bit.
All right, let's take a look at that real quick. Okay. I guess I'll pull up the actual futures market. Okay. Take a look at what we got here. So this would have just opened on this candle that is not telling us, and this is delayed. What I prefer, and let's try this, is using the Forex pair has always been a little easier for me to understand. So right here, this candle is where we opened, and it looks like it's currently a bit of an inside bar, not a whole lot for me to glean from that open. In general, so to be honest, I do like seeing, this is kind of bullish to me when we're in a bull market, and it's been a pretty good bull trend. The open, having the first open be against the trend is something that I kind of like to see, and then having the close be with the trend is something that I really like to see. So having this kind of open down and maybe spend the next few hours, 4, 5, 6 hours kind of down in here, and then when it gets closer to closing, seeing it rally back up towards over 28, 29.80 or so, that's kind of the ideal sort of action that I like to see, especially after a weekend, while it's in a strong trend. But outside of that, there's really not much I can say here. What do you think, Tyler?
Yeah, I would agree that it looks very flat. That line at 29.73 is interesting. If you go across, you see the last, you see a bunch of touches, both from the top and the bottom. And so it's a struggle right there, but we'll see what it looks like in the morning when we wake up. I was hoping for more, a a big opening in the futures. It looked right off of Bloomberg about an hour ago that maybe there was more of a pop, but it doesn't look like it. So we're just going to have to sit and wait on that one. And how about the gold market? Is it doing anything? It looked flat to me also.
Yeah, that was one I was interested in, and did recently get stopped out of my position here in a small profit. So I no longer have any exposure to this market, and I am kind of happy about that, to be honest. It is starting to definitely make me a little bit nervous, which is the last thing that I was expecting after we broke through 3,000. That was really what I was expecting to take off. I was curious to see if this would be a bit of a head and shoulders. I don't think it is. This last spike up just went too far up. If it petered out around below 3,000, that would look more like a head and shoulders to me. So yeah, I agree that it's pretty clear that 2973 is a very important number. So let's go ahead and take a look at gold. And this is
very important. Either.
Nope, but it is at such an important point that anything that does happen is very, very important to me. So this really did close last week at a pretty critical juncture where my stop loss had been moved to below this prior swing low, about 14.13, and we are now threatening falling back into this sort of ascending triangle that was the reason why I added to my long exposure. So I'm really, really wanting to see this low hold at 14.20. I kind of like seeing that doji that pulled up short of this swing low here. That made me think that this support here at 14.22 could potentially hold. And this is a lot of action. I mean, I guess this market's been open for 4 hours, so that's not necessarily that much action. But this is really at a very important spot. I really want this to support above 14.22. If it breaks down 14.20, then I'm going to be kind of expecting my stop to get taken out at 14.13. This is one where I didn't take small profit. My target for the first profit was 14.80 from this ascending triangle. So I have adjusted my stop to a little bit tighter, but it still is, I still am risking money here. So if this does trigger my stop, I will be losing. And this is a trade that I was feeling really good about. It would definitely be a bummer to get that stop triggered. As long as we're above 14.22, the most likely situation for me is that this was a higher low, that this is a higher high, and another higher high would be expected. And I would measure a swing move, price and time like that. So if we can hold like this really should take off if we hold in the next day. If we don't hold, then I would basically expect it to take off in the other direction pretty quickly. So it's kind of same thing with S&P. Once that thing broke through 3,000, I thought it was just absolutely off to the races. And when gold, it broke through 1380, we're kind of holding our breath to see what happens next. It then forms a bullish continuation pattern. It then confirms the bullish continuation pattern. At that point, I'm thinking, heck yeah, this thing is gone. We're off. I'm super happy with all the exposure that I got. And then now, out of nowhere, it's pulling back. So this stop is just for my margin long. I will be definitely much more careful with the long-term position that I'm holding with spot gold. But this is today is a very important day for gold as far as I'm concerned.
Yeah, I agree. Tone thinks exactly the same thing, that tomorrow is going to be very important. So we'll definitely be taking a look at that. And thank you all very much. We ran over again. It seems to be a habit with us, but I love talking about this stuff. So does Socrates. I hope you love listening to it. We try to get as in-depth as we can on topics as they come up. And with that, I will say adios. Socrates, thank you very much.
My pleasure. I am Having some technical difficulties here. Okay, got it figured out. My pleasure. It was definitely always a joy analyzing some charts with you. The markets, as they have been over the last few months, have been giving us plenty to talk about. So in the future, we will probably have a little easier time keeping it short. But over the next few weeks, and months, maybe even, I'm not sure how short we'll be able to keep these. But when there's this much to talk about, we really don't want to miss anything. Sometimes just one little chart or one little line can make all the difference in the world. So we absolutely want to cover everything that is staring in our face, and we'll be very excited to see what happens with gold over the next 24 hours, what happens with the S&P. It's also at a very crucial spot, and then Bitcoin is, as always, going to be at the top of our minds. So thank you, everybody, for tuning in. It's been an absolute pleasure, and we will look forward to seeing you tomorrow.